Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting on Friday, October 3rd, 2025. We're in a bull move, and the market has been quite interesting, of course. It always is every day. Today has got a little more interest in it in the sense of the chop and the volatility, and that makes it a little more challenging depending on the time frame you operate it. But we're going to talk about the market, of course, and we're going to review the higher time frame, kind of how we got here, where we are at the moment, and then how we might navigate the current market condition, which of course is always changing. The other thing to know about trading and is it is very time frame specific. Now, when I refer to time frame, there are traders who will trade a larger swing in Trader Lab. So traders will be getting long, other traders will be getting short, depending on the time frame of rotations they trade, because as you know, rotations happen inside of each other. That's a vertical integration of time frame. So when we talk about, at least here in the stream, when I'm talking about time frames and specific trades, I'm really overlaying them for what as day traders might approach this. So it's not about scalping, it's about rotations. And for myself, I work towards larger rotations. So I'll go over yesterday's trade where I was short from the open down towards the low of the day. And then there were other traders who actually got long at the low of the day. And if you understand how the market works, you'll understand why we both did what we did. But we are different time frame oriented traders. So that's what makes trading so unique and such an individualistic thing. There's not one way to trade. But you do need to understand how the market works, why it does what it does, how to get in alignment, and then you adjust how you use the tools. And the tools are auction market theory, overlaying structured trades on a chassis called the volume profile, and then, of course, a high-tier tool like Bookmap for order flow. And I call Bookmap the tip of the spear. So it's kind of where you use a top-down, bottom-up approach. So when you get into the, shall we say, the micro part of this, for execution, trade management, then order flow is very useful. As you go up in higher time frame, which is like what you build the shorter time frame on top of, then you might use different processes, like a profile or whatever. So let's go from there. And thanks for visiting Trader Lab. And remember, the Trader Lab is a group of like-minded traders that come together to leverage their collective experience. It's about the business of trading. There is no holy grail. Of course, and there is no plug and play in trading. Otherwise, we'd all plug play, get the ATM going, but it doesn't work that way. So if you're working hard but not getting where you're trying to get to, keep waking up in the same place, which I call Trader Groundhog Day, you might want to visit Trader Lab. It's a community of traders, and the key about this is there's not one way to trade, but the business of trading is probably a lot different than you imagine it to be. And when I use the term imagine, I'm being very specific. We imagine trading, but what it is, the business of it is different than what most of us think it is. So you might be trying to solve for something that is not in alignment with the actual business. Do you know that or not? If not, come to Trader Lab. It may help you on your journey. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but if we get into real time, we'll discuss market structure and potential market mechanics. Any trades that I share here or in the materials I share in the Trader Lab and the library of webinars and the PDFs of structured trades, you have to vet. There is no plug and play, sorry, wish there was. It would have been a lot easier for all of us, right? By the way, when it comes to building trading business, you do need to know what an edge is. If you don't know what an edge is, you might want to think about getting one. And Bruce, lead educator, can help you extract an edge. And edge is really the way gaming works. Casinos only play games with edge. So they're not making them up. They're not impulsing and all the things we typically do. They just deal the cards. So they control the way they play the game. They don't control anything else. We control the way we put on trades, where we trade, what we do. We don't control what the other participants do. We control nothing else. It's the same business model. So if we have a proven business model, we should only play games, or shall we say, take trades that have an edge. Does that make sense? Just saying. And this is what the 60 PDFs look like. There's no plug and play. Once again, these are just examples. Many years ago, traders were asking me, what are you doing? So I threw some things together. I am an educator. I've been doing this 46 years professionally and out here with you, but there's no course. Basically, it's the lab, and the lab is everybody. It's not about me. The lab is about you. So if you're interested in Trader Lab, there's no cost for it. You can download these, and the idea of Trader Lab is to give you ideas and to leverage the community, because there's been a lot of work done. Not only what I've done, but data mining and a lot of other work. Everybody brings something. It's like the smorgasbord of trading. Anyway, I hope you have an appetite for trading. This is the higher time frame. Now, I want to point some things out. Now, this is the current. Now, this is the trend day up. This was the week high I was talking about. And if you follow these streams, you already know the story. But this is what's important. Let me talk about what's important here. And I'm going to reference a couple different things here. This is current. Notice what we did yesterday. We opened, we got what's called responsive selling, which means sellers. And we came down, and I'm going to show you targeting. Because yesterday I sold the open and basically took it down towards the low of the day. And then when once we got profit taking over, the buyers came back inside, and then we built higher value. And I'll discuss what these concepts are. 67.66 is the retail price from yesterday. Big shopping, because this is only shopping. Trading is not complicated at all. You may go, really? It's random. We translate randomness as complexity. It's not complex. It's random. Different, right? So if we're trying to solve trading, we have to solve for randomness. That is how the casinos operate. They live in randomness, but they've solved for it by only playing games with an edge. That is how you solve when you operate in a random environment. So we're in a random environment, so we have to solve for that. So this is our retail price, but on the trend day up, which has no value, when I say no value, it's a discovery. It's like, what's this thing worth? I don't know. That's what it's saying. It's a language like, I don't know. Well, then if we open and you've got longs in this mark in here from the trend day, then what might you get? Some profit taking. Then if we take week longs out, where might the buyers go? Oh, really? Bargain? And then come back. And that's what happened yesterday. And then we closed higher. When you close up here, then we anticipate continuation. So there you are. Now I'm going to show you yesterday. Now this is yesterday. The target yesterday was here. This little line coming out. And the reason this is material is on this day coming up, and this was here, we sold this day, it was resistance. And you guys know the concept. Here's our trend day. Here's our fair value. And yesterday we came down and did what? Tested the same level around 43-ish, and that was too low. And now this becomes what's called value, because we had a two-sided auction, which says what's too high, what's too low, and most of the volume was in here. So we know this is outside. Let's go a little further. This is what it looks like in the market profile world. So yesterday, this is the shorts. I narrated these in the stream. So it was short from here, gap, come in, and the target was this right here. And it got there. And then we come all the way back to what? The fair price. So, which was here at the time. So it's short. This is all what I did primarily yesterday. And then some traders in TraderLab got long down here for the ride back up to the fair price. That's kind of how this thing works. Kind of strange, isn't it? Very interesting, right? That's trading. 1 second. So what does this say? Longs from here. And what does it say about today? Longs today to check yesterday's high and then wherever it goes, because we're in new territory. So this is its own little world now. This is too low, too high. The fair price is 64.75 between these from yesterday. And now today has not been what I call a picnic. Some days are a picnic. Today hasn't been one because it's been very two-sided. So let's take a look at today. And I'm going to discuss structured trade. That hasn't been a walk in the park for me. And this is not my kind of day. I take more stops on a day like today. I just have to do my thing. And when I find that I'm not getting the results, just as part of trading, in the end, it's edge. It's not any individual thing. In some conditions of the market and my plan, most of the time works very well. When the condition of the market is difficult, you might say, then if I have tight range, there's a lot of things that happen in this where I'm losing my advantage for the risk. And I don't know that until hindsight, part of the joy. So let me take you into the opening trades. Now, the open is a really aggressive place. Now, we're opening outside of value, but let me just make sure I got all my stuff here. Settlement is here. So it's higher outside of value, inside of range. So I know the following. I know the overnight volume point of control, which is somewhere. I think it might be covered. Let me just see where it is. It's up here, I believe. Hold on, 83. Let me just make sure where these things are. Yeah, 3/4. So this is the retail price from the ETH that has over an 80% probability that we're going to tag it. Getting the previous high or low, about an 82% probability. So, and we're leaning to the the previous RTH high because of what happened yesterday at the RTH low. We tested a key level. So you start putting a case together for what you think might be the lean, Then we have the ETH high, 76% probability. The previous value area high, 72, percent probability. So, and then here's the open. And then this, the naked volume point of control, close your eyes, 68% probability. And that's enough to get us going, okay? Oh, coming out the first hour's high, about a 66% probability. So that sets up longs. So everything says get long. Now, part of the thrill is where? You're saying, really? Yes. That is, my friends, the rub, as they say. So now we have to then use structured trades, an attempt, and that's all you got in this business, to get long at a location. So here's what I know. I got a high probability of getting here. I got a high probability of getting here. And that's all I know. And I know I'm skewed to the upside. Yesterday's high, overnight volume point of control. And then after that, ETH high, and then put the helmet on. We're in no man's land because there's no trade, no reference. So then we just look at measured moves and things of that nature. So RTH open. And now what's difficult well, trading is difficult because of randomness, but today especially makes it a bit difficult because we're going into the weekend. We know the market's bullish. We know that we found our buyers yesterday, and we know at some point today we can anticipate profit taking ahead or flattening out, evening up ahead of the weekend. So you have to be aware of those things. But you also have to trade what the market presents you with. So let's look at what the market presents. So remember, I'm looking for longs. So this is called a variable high volume node. Variable high volume node. So too low, break high. I see my buyers. Now my first location to get long is going to be a test of this right here. Okay? So here's how this might work. I see the liquidity. This is my retail price. Remember, trading is shopping. So over here, here's how this might work. If this is the retail price and I break away from it, it might mean this is too low. I don't know. Now, when the price shifts up, is this too low and we continue, or is it too high and we come back and test what was too low? So I think of these like support and resistance. So I'm going to put a little line over here just so you could see it. I'll take them off later as we go. So I'm a shopper. Trading is shopping. And, I like to buy on sale. So this is a price now that is too low. If this becomes too high, if I cross under it, I can check this. If this holds in this area right here, or I only pick this opening swing low, which is also possible, and I have value area high, so I'm looking at these levels, and of course I can, do whatever, then I'm going to be looking for a long. So this was my area for the long, and when it crosses here, here's my choices. I can be long here or under here, or if it crosses above here again, then it can take off. Took off. I did not get long. And this is my target. So, I'm sitting here and, nasty thoughts. So, what is this? Retail price. I'm going to mark it. Now, so I tagged yesterday's high. Let me, I got to label a couple of things here. I'm a little slow today, guys. Apologies for that. I've been up since like 3 in the morning Central Time, so kind of puts me at a disadvantage cognitively. And this is the 82-ish% probability it's the next target. So I pull back to VWAP and mid. This is underneath me now. I broke away from it. And what else do I know? This is too low because I couldn't get there. My buyers came for it. You see this? This is absorption. Now I do have an option to buy it on this breakout, but I'm not really a breakout trader. I'm more of a pullback reversion trader. So I trade rotation. So for me, if I'm going to get long, this is my area for a long. I have to have my stop out here, and I'm doing something called reversion. And and this is not where anybody should trade. The idea of getting long here is only to come back to the high volume and then go for this. So this is, the idea of this thing. And that's the target. So let's talk about this. So this is a trade. And let me give you, remember I said, when it broke here, I had a choice. I could have bought it against this, right? I could not because I'm not a breakout trader. But what do I know? I know my buyers were here and there was buyers there because what I didn't do. So now I know if I come back here and I got mid and VWAP, I can buy this and I have to be dealing with this and then this is my next target, 80, right? So what I was thinking of when this happened, I said, okay, I can get long, and I've got yesterday's high, and I've already tested it, so I've got a scale in front of yesterday's high, and then go for the 82% probability. So that was the trade. Also, I'm going to show you another little piece here, as long as we're at it. This is called VPOC migration. Now, I'm showing you structured trades. I'm not saying they qualify for anybody. One of the qualifications, so I'm focusing more on market mechanics here, not necessarily if these trades work for you. The structure, you can learn the structure so you recognize the behavior. The auction does not care about range. We do, because of risk reward. So out here, when we pull outside, this is still mean reversion, and this is the mean, but there's no range. So the trade would not qualify, but the behavior does. You can learn the behavior. And that's retail. If I clear here, then I have this. If this is too high and I can't get over it, then I can come back here. That's what I know. That's it. I don't know anything else, and that's all I do know. And then this. Now this, when this happened, now I'm going to tell you something. I did something here, and I would like, to tell you that I knew something, and I didn't. I got out of my trade here, and I got out of it because I got my target, and I read in the order flow absorption, and there was something else that happened up here. Can't remember what it was. But I exited, and then I thought, well, and at the time I exited, I said, well, maybe you should have stayed in, because you still have the ETH high, But I got out of it, and I was starting to have regret. I'm just telling you, I don't mind telling you about this. I said, why did you do that? But I have it in my plan that if I read certain phenomena in the order flow, that it's optional for me. So, okay. And then there was this. When this happened, I went, what was that? But I know if I have a sweep, now I can look for the long again, because this is a big deal, and look at the delta. So I see this delta, and I'm thinking, well, is this a short? I mean, what's going on? I'm confused at this point. I'm just telling you. I'm sitting here and I'm going, what's up? So, and I feel pretty fortunate about this, and initially, when I did that, I was actually having regrets. But I got to just do what I do. It's kind of like, well, here's the plan. So this is the next target, ETH high, and I get a sweep. All right. So this I did not participate in right here. I saw this, and I had all that regret that we all get, right? I get the sweep, and so here, nothing. I see this as a short, and I did not take a short. You just don't do that. So I come out to my location. Where am I? Remember this? Too low? Too low. There they are. They're on the price parade. So I'm coming out here, and now I'm back into value area high, take out this low. So I'm looking for it to come under, and then either test here, there, and I'm going to look for a long to come back. That was the plan. But let me give you the but. What am I seeing? Sweeps. I'm at an outside edge. My teeth are chattering because this is a long for me, but not here. A little lower. Anywhere lower is okay for me as long as I get a trigger. But not so much. Watch. Now here, I get the buyers, and now I have microstructure. Watch. So, and this is a hard trade. I'm annoyed. I'm going to tell you, that's emotional. It has nothing to do with trading. It's how I feel. I feel annoyed. So I'm looking for the break to get long to come there. What does it do? Nada. And where does it go? It comes there. So it's like that's my trade from somewhere back to there. Annoyed. There's a sweep. What does it say? Rotation. So I'm going, okay, now maybe we'll get this, and then I can come back and then go up. Watch. Where does it come? Here. So I got this downside rotation. I got this upside rotation. Upside rotation. Looking for it, to do whatever, and I'm looking for my long. Counter rotation here. This is support. I'm still on the, because that might be too high. I'm on the, no. We're just going to hang out here. 1 second. Okay, just watching a position here. And so I'm just definitely having indigestion here. So again, off it goes, and I'm going, this is really disturbing. 9:30, we have something called the IB, and it's the first hour's high or low. Now, and that's set at 9:30. So, and that's called the IB. So wherever the first hour's high was, which was over here, that's the first, and that's it. And we had selling there. So there's a high probability we're going to take it out. Right here, we take it out and we do a pullback. There, we have a trade in Trader Lab called the IB continuation trade. And this is a long. So it's a structured trade. So this is my long. Everything else, I'm sitting here and I'm, managing my emotions, and I'm, disturbed. So far so good, rolling along, and higher. And I have nothing, I can't tell you anything more about where it might go. I don't know what it'll do. I have this 1.5 DIB, which is right here. It's a target. And then I have 2 times the IB. I have nothing else up here. It's just, and there's liquidity sitting at 68. Now, let's look at this. So I have icebergs here. Right here, I'm looking at this, and we're talking about this in Trader Lab. I was posting about this. I said, this is a weak high. And you're going to go, what do you mean it's a weak high? Because it's like a double top. In other words, it's just banging its head on these sellers. So this volume is running through. So the buyers are here, but the sellers are feeding it to them, the passive side. And we can't get over this. Now, I'm looking at this, and I'm saying to myself, well, these buyers are pretty persistent, They're doing a great job up here, except they're not getting through this. So at the time I was looking at it, I was saying, well, this is a weak high. I think we're going to take it out. Now, when I say I think we're going to take it out, it doesn't mean we are going to do anything. This is trading. So let's look. Where's this high? See where it is? It's right there. It's weak. Now, so I'm looking at this, and what did it do? That. Now, let's look some more. This is called VPOC migration. This is our new retail price. So this is good news for the long, because now it's saying, the language of the market, that this is too low. So now, how do I trade this thing? Well, it's a great question. So I think I have a weak high, and it's like a double top. You see, let me just put a little line here so you can kind of see. See this? The sellers absorb the buyers, but this is exhaustive. It is not top. And I mean, it could be, but chances are we're going to take this out. So I posted in Trader Lab, weak high. Now, weak high is never anything more than weak high. It's not like, yeah, we're going to take it out. But what it says to me is that we have a real good chance at least to come back and check this, because there's going to also be buy stops now sitting up here. Anybody who's getting short, So now I'm looking for ads. And my next, so I had along here, the IB continuation, right? This. And then I get the migration. Now I'm looking for something called mean reversion. And we always call it mean. So where's the outside edge? It's there. Low volume node. So my next trade is going to be outside and leaning against here. So there's a combination of elements right here. Outside edge and IB. And there's going to be stops here. So if I get involved, I have to be very careful because retail traders put their stops over here. So let's look at this. So where's my support? It's here. So right here, I added in, there's the absorption, there's the liquidity, and I'm trying to go back here. And my stop is going to be under here because that's where the buyers were, and you see the aggression. So that was my stop. And I'm like, this is the end, right? See? So where were my buyers? They were there. That's where my stop was. And I consider this, as they say, extremely lucky. Now, here's another piece. Let me show you this. And I'm still in this trade. There's a sweep. Notice what happens with sweeps. You know, you see the buy sweep here, down, sell sweep here. This is a nice structured trade. Now, there's no precision in this. I always say to traders, look left. Because I don't want to be with everybody else. This is easy pickings. Because retail traders are going to put their stops here, there, right? Risk adverse, aren't we all? I found that if I behave like other retail traders, I really shouldn't anticipate a different outcome. So I have to be further away. And yeah, when it doesn't work out, I'll take a larger stop. But if you keep metrics, you may find that by staying, not managing for minimal risk, but managing for intelligent risk and edge, even though you're going to take these stops and nobody enjoys that, overhead and cost of production. I don't like paying any bills. Do you? Casinos do. They pay the gamblers. So then I know that it has to work to get to me. In other words, it has to get through this. And I also know there's going to be stops here. That's what I know. And there's my sweep. There's my absorption. There was my liquidity. And when I put a trade on, I assume I'm going to be stopped out. And that's more for mental protection because I can't predict what's going to happen. Why would I assume that I'm not going to be stopped out? I am prepared mentally to play. So when I put a trade on, it's 50-50 on that individual outcome, not over a random distribution because I have an edge, but the next trade is as good as the last one. I hope that makes sense. So lucky. And then I was coming here. Trend is up. This is a variable high volume node. Too high, new retail price. Come out here, outside edge. This is resistance, but I'm in an uptrend. I have a weak high. Here's the rationale. This is where I scaled. So, and then weak high out the top, and then whatever it does, it does. There it is. So that's it, So I didn't get stopped out. I thought I was. But I followed my plan because I will not put my stop. I don't do what I did for years. Put my stop with everybody else. Instead, I look where everybody else is and I don't put my stop there. And another reason for that is this. Who's going to buy? Who needs the stops to come out? The icebergs. Because they're the passive guys. These are limit orders. See all these stops that are coming out, all the stops are piled up here. And the buyers are there. Iceberg, iceberg, iceberg. They're buying this. Buying, buying, buying. Now what? We take the stops out, 461 plus others, and I get the sweep into the liquidity. Who's buying here? This. So all that happened here was the buyers that were buying here, this is an assumption, and the retail stops piled over here. Think lemming. You know what a lemming is. They get thrown under the bus, and the smart money, let's assume, the icebergs, who are more sophisticated than us, use the stops because they need the liquidity to exit their orders. And remember, we're seeing the tip of the iceberg. You don't see the full order. They're not showing. They're only going to show you the tip. That's why it's an iceberg. There could be thousands running through here. There's a sweep. So that sets that up, and still north. And there's nothing else I can tell you about it because there's nothing up here except what we say thin air. That's the next area, and there's resting liquidity. And we're caught up. Strange but true. How are you guys doing? And welcome to Trader Lab today, guys. How we doing in YouTube, guys? Please give a like. You know, today is what it is. Some days are like magic, and today it's kind of like they throw a pie at you. It can be very difficult to trade these kind of days because you can get easily shaken out. But remember, in the higher time frame, everything says long, and I had no short trades today. I did have something in the ETH. I was trading the short in the ETH, but that's very much just rotational trading. But the primary RTH, based on everything I gave you at the top of the stream, is just long. So if I put a trade on, I get stopped out. It doesn't mean I'm going to, now when I see stuff like this, when you see somebody dropping big volume, it can be disconcerting. That's why I come back and I look at the profile, because when I see something like this does not necessarily mean that the trend has changed. It's just somebody dumped a boatload and it took all the liquidity. That's it. And the stops, So anyway, not getting under here kind of threw me off as far as the location. So I couldn't get, I was looking to get long out in here. I couldn't do it. Then I had to wait. So I just wait. It's like, this is a business of being patient. So too low, too high, except now we're above it. So maybe now it's too low. Let's see. So outside edge, current high a day, liquidity. Then we got this out here. So, and it does, 68 was the resting liquidity. Initially on my long, so this was my target. You could be done with the trade and go back in your Barca lounger. Hold on a second. Let me just look at things here. Anyway, this was a strike, and this was resting liquidity from this morning. It could be a target or not. It's subject to your plan. This is a distribution. The outside edge is there. This is how this thing works. Too high, too low, retail, high volume. Think of this like your convenience store. I'm not paying that. Yeah, but it's on sale. Fair price in here. If this becomes unfair, I can come outside. If I come outside, this and the next higher time frame up is the fair price. So if it's too low, I can check this and then come back here. If I just fall out, then I'm coming here. I can't tell you what it'll do because nobody knows that. So I know is I have reference points, and I am seeing my selling. You can see this, these algos in here. And the 68 was resting liquidity. So we have to see. This might be the high of the day. I couldn't tell you. It's not my job, and I never know until hindsight. So I don't pick the high of the day. I do target things like this, but this only, so here's the thing, high of the day or rotation, get some stops out, and then continue and test it. And if we get through it, then you go up to the next level. If you don't get through it, then the long's in here. Don't forget it's Friday, and we can get evening up, ahead of the weekend. Then we can just come back and balance out and maybe come back here. It's not my job to tell you because I don't can't tell you because I don't know. So we operate in an environment of randomness, right? So all we can do is try to get in alignment with the market, define change, and then try to just stay with the thing until it changes. We're going to take stops. I do. And just is what it is. And there's going to be days where no matter what you do, it's just not going to work. Because your plan, even though it has an edge, it's not 100%. An edge is over a large sample size. It's not like a day like today. A day like today can be a very hard day to trade. I don't find a day like today a joy compared to other days. Other days seem like smooth sailing, and other days you're doing the same process, but the condition of the market's different. So then it's like, think about flying in a plane. Some days it's smooth, and other days you're going through turbulence. What's the difference? The condition's different, but you're still flying the plane the same way. That's kind of what trading is like. So this is an area outside edge, remember? And this is your retail price that we left. So this is an auction. That's too low. If we don't get back above here, then it's too high. So I got too high, fair, got to clear it. If it's now too high, I can reject it and start working back towards this. And I can't tell you which one. Are you guys tracking? Do you have questions? How we doing? Please give a like if you're visiting at YouTube. And by the way, if you're visiting in YouTube and you haven't taken advantage of it, there is a link in the bottom of YouTube. You can access the Trader Lab community. There's no cost for that. It's open to everybody. You don't have to be a Bookmap subscriber. And there's a lot of additional education, all available at no cost. So all you have to do is verify your Discord username. Keeps the spam and all that jazz out, so you can appreciate that, right? And the Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It is not material how long you've been trading. We've all walked in the same shoes, and I think that's pretty important to understand. There's no secret sauce in trading. What there is I think, a lot of misconceptions about what the business is and the tools. Most of us are gravitating towards, at this stage, social media, gurus, influencers, content creators, and who knows what else, and snake oil. Because even when I started in 1980, back then we didn't have PCs or an internet, but we had what was called Commodity Magazine, and there were all these ads in Commodity Magazine for all these great systems and stuff. And back then a system was on a calculator, and they were, So I bought these things. I went to bought every book, did everything I get my hands on, went to seminars, threw thousands and thousands of dollars down the, and because I would do anything to improve and to become consistent. But nobody ever talked to me about statistical edge. It wasn't really, because all my friends were floor traders, and edge was really not the same thing. It wasn't gaming. For them, the edge was the getting in between the orders, So it was a different concept than, what we had. So it really was, for me, classical bar charting. So I had no idea what was going on. I just thought, well, look, there's a head and shoulders. Let's measure this thing and look where it's going to go. And then I'm going to predict that and put, do something over there. Anyway, not so much. But because I work randomly, and this is the problem for most of us, whether you were like me, eventually became a money manager, or everything works. So we don't differentiate between randomness with no edge and edge, because they all look the same, but they're not the same. So remember, outside edge, right? Oh, it's on sale. Retail, I'm not paying that. And look what's still sitting here. So the buyers have to consume the sellers over here. And this, again, this is resistance. So we want to be paying attention here. And the buyers, it's like Pac-Man. So let's watch here, because this was pretty good selling right here. So, and what happened over here? Absorption. So I have my support here, but if I'm getting long, my obstacle is right there and there. So now we have to see the behavior here. So let's right now ask yourself, how do you manage this trade if you're still long? Or are you out and you're done and you're, going to go out for pizza? Which is it? Are you still long? You have a trade management process. Trade management means you're going to be potentially giving back open trade equity, and you have to accept it. You need to know the metrics in this configuration. Trend day before yesterday, going back to the higher time frame, we shook out the weak longs, found our buyers. And today, I think the big thing, and I like to think of the term the canary in the gold mine, is what didn't happen. And I have a thing I kind of came up with for myself, and it's a narrative. It's if this, then that. So that's a condition. But if not, then what? If we have our selling and we don't get under here, we didn't take this out, did we? Hold on a second. I think I'm losing it here. It doesn't look to me that we took the IB low. Is that correct, everybody? By the way, we got to watch this resistance, okay? Yeah, right, thanks. Yeah, we didn't take this out, and this is a high probability statistic. When you don't do something, that's like, the siren goes off in your ear. There's the sweep, looking for the stops, and the reason, and why is it so important? It's the opening swing low, and we didn't take it out. There's the change. So that's what that just threw everything kind of for me, threw it in a little wrench into things. So I had to get long, elsewhere, which I did. Back here, I should say. I know what it is here. IB low is all the way down here. I'm in Twinkie land at this point. Here it is. Sorry. Again, up at 3 a.m. I should just put a straight jacket on me. So I'm in a deficient cognitive condition, actually. I can still trade because I can do it only because I wait for trade. So I might look at an IB and have the wrong one over here, but when I'm trading, I know where I am. So anyway, this is just longs, and this is your outside edge. So this is what's called the distribution. So what this is an auction. So it's like too high, too low, and we know what's too high. And if I can get through here, I move up to the next place, and whatever, and then it's trade management. So when I was just asking you guys, where does this trade fail? Isn't it under here? Would you put your stop there with everybody else? Why do you think we have this? It's those stops. That's retail trader behavior. Think like a retail trader. Just don't act like one. Early on in my development, when I was building, well, not so early, but let's just say, let me see, when was it? 6-7 years into my trading career, I started working on trading systems. And I writing code. And this is early on because we're talking DOS, So, and I started writing systems and testing them and doing all kinds of stuff. And in my own experience trading, of course, I was always getting stopped out like you. And I got, of course, why am I always getting stopped out? I'm doing the right thing. Well, it took a little while, but the light bulb went off. Maybe instead of putting my stop where everybody is putting their stop, maybe I should trade into those stops because they're there. If I know I have sellers here, Would it make sense if I had a system that then would only trade into the stops instead of putting my stop there? Maybe, and now this was not this kind of range. It was bigger ranges. So, and for me, short term, early when I was building this system, there were no intraday trading really wasn't going on. It was really position and swing trading. So when I built this system, it was pretty aggressive. I was using 15-minute bars, open, high, low, close. We didn't have candles or any of that yet. So, and the technology didn't exist for intraday. So I actually had to buy data in 15-minute bar format so I could build a system, and the system saw each 15-minute bar like a day. I'm only saying is so I was and to capture data, it would actually save 15-minute data chunks so I could run this system. And all this stuff was being done like saving the hard drive. I mean, this is just ridiculous. So anyway, that's not to waste your time with this stuff, but it's kind of what I was doing. So I built this system, and I traded into stops. And the only reason I'm bringing this up to you is along the way, I started developing this understanding of market mechanics. And it would take a long time, believe me, a long, long time before I had a better understanding, but it started coming together in pieces. And this is before we had order flow or anything. We didn't have volume. We didn't have domes. You picked up the phone, called your guy on the floor. Hey, Louie, give me 20, or whatever, So that's how it was. But my understanding of inventory and how it worked started developing back then. So I brought these ideas forward as my understanding, and the technology developed. So the idea of not putting a stop here is a good thing not to do. What do we know here? My sellers are here. There's the iceberg. That liquidity is still hanging out, and my stops now are here. Buyers are there, stops are there, stops are under here. So these are my choices. What do I do? Do I have a plan that says get out? Do I have a plan that says get taken out? Out here? What is it? What can the market do? It can do anything. It can come back there or here. So your plan, the answers to what you should do exist before you have to ask the question. If in your mind, if it's what should I do, then you don't have a plan. All the planning is done outside of this. This is random. So you can't plan. You have to plan for randomness, but you can't answer what you should do here. You need to know what you will do here, or what you won't do there, and what you will do over here. It's one or the other. You're either going to have a stop that's trailing under where the buyers were, and there's also going to be stops here, and there were buyers here. There were buyers there. If we don't get under here, then we can come back here. But if we can't clear this, then the long is in here. We're going to rotate, and you have to accept it. Now, because here's what's going to make you crazy. Hyde, Jekyll and Hyde, the lunatic. It's like little you. Little you is 100% right in hindsight. You should have got out here. Now you're going to berate yourself. Hindsight's 20/20. Why didn't you get out there at the high? Why didn't you get out here? That's what you're going to hear in your head. How about you can't know what to do unless your plan tells you either you do get out there, or your plan says you get taken out because the structure has to fail. Which one is it? JJ Marks, I'm getting asked, did I have an IBM 386 with the floppies? Yes, I did. But before I had the IBM, I had a 286, and before that I had an Apple IIe. high tech, swapping disks and that thing in a dot matrix printer that was the size of an apartment building. Yeah. So my first computer, was that my first computer? I think the Apple IIe was my first computer. And George Lane, who created Stochastic, had the Apple I. We shared an office. And that's really, when all this stuff was becoming available, we didn't have PCs, but early on, when I started, 1980, we had, call them a dumb terminal, ADP Comp Trend, I think is what it was called. And I was at the Exchange in Chicago, and you actually had to run an extension cord, telephone line for data, and the data came out of someplace up in Massachusetts. So you actually had an extension, and it cost a fortune. Back then, it was over $700 a month for this thing, and that was real money. I can't even imagine what it would be today, considering the value of the money today is worth so much less than it was then. So it was very expensive. And Wells Wilder was all kind of new, So, all the stuff you take for granted was all new. I spent years pulling those things apart to understand them. Oscillators were a new idea. George created the stochastics and a lot, and oscillators are really moving averages. So that's really what they are, derivative. So I wanted to understand, why and what, and then I started creating my own indicators and spent years doing this stuff. So I spent a lot of time. Notice where, right? See? So this doesn't mean anything other than what? Why is there a line here, you're asking? I'm asking too. Why? Because that was resistance. Old concept. Resistance becomes support. The other part, what was too low? Well, maybe this. It's too high, too low, resistance. Resistance becomes support. And it's not a recommendation. Now, where's my resistance? It's now going to be right there. Okay? How does this work? I'm not paying that. Yeah, but it's on sale. Retail. So if this price, think of this like a convenience store. This is an auction. So the trend is up. So for me, I don't pick the high of anything, not my skill. What do? And again, this is not a recommendation. I'm clueless, but I'm not ignorant. And that is uptrend, longs only. Other traders are going to sell this, but whatever they do, they do. It's okay. I'm a little bit more of a the trend is your friend concept. If the market's going up, I want to be a buyer. If the market's going down, I'm going to be a seller. If the market's two-sided, I'm going to pick the dominant side and stick with that one. So even if we're counter-rotating, I'm primarily going to take a side until the condition changes. So intraday, I can be doing this kind of thing, but if the overall trend, based on what I showed you at the top of the stream, is, as they say, north by northwest, I'm leaning long, you see? So, but I don't know, if things get changed, I can get short to get long, or I can exit the long, let it come down, not take the short because I'm getting on the weak side, maybe, and then continuation longs. That's what I do. I don't want it to be complicated. It's random. Why make it more difficult than it is? Here's the retail price. If it's too high, what's going to happen? I'm not paying that. I'm out of here. So let's watch. So this is called mean reversion, stressing the word mean. Now, what's mean reversion? It's the primary trade you should learn in the Trader Lab because the market is always rotating. That's the nature of how this thing works. It rotates. Well, if we think the trend is up, are you going to buy there or do you want to buy here? Which one do you think is better? You need to understand market mechanics and rotational auction-based behavior. If I know that I want to get long, I'm not doing it here. I see resistance here. That says wait, and then I have to come outside and go, well, it's too low there. Okay. And this is my outside edge. There's my last price where we said too low at the time. I can buy this, and then I got to deal with this. And either if this is too high, see how it works? If this is too low, this is my fair price. If I get through here, then I'm going to check this. If I get through here, up there. But what happens if I get out here, I come there and it's too high? Then this is going to have a problem. And then I can come back here. That's what I know. I don't know anything more than that. I don't need to because I can't. Now let me take it one little piece further for you. Suppose this location and the range to there does not fit my risk-reward parameters. Then the trade is not qualified, but the behavior of the auction, you're going to see it all the time. So the auction or the market mechanics don't care about what we need for a risk-reward ratio. They don't care. It doesn't care. We care. Can you enter here? By the time I'm conscious, I'm probably be getting long over here. And my resistance is there. That's not a qualified trade for me. So this trade is more for me a trade management opportunity. If I didn't get out here, which I might, but I'm not, that's just me, then I know that this is my outside edge. And if I'm already long, then my stop, my trailer is out under here. So in theory, if I am still long, my last long was, I think, out here somewhere, I'm still long. See? And then it's put your helmet on and welcome to the world of randomness. That's what you got. Hope this is useful, and I hope this is making some sense. How are we doing in YouTube? Please give a like. This is the day, guys. It is what it is, and until it isn't, I stay with what it is. And this is part of the joy of trading. We're operating in a random environment, and we have to try to make some sense out of it. We could do that with edge. Just remember, this is gaming. It's not predicting. And it's not chasing the market around, responding to FOMO and revenge trading and all that. And that's what most of us do or have done. And at some point, you're going to realize that self-destructive behavior, and that's not what professional traders do. Professional traders overcome their humanity. What's our humanity? Fight, flight, fear, apprehension, uncertainty. Can you make a decision right here? Right here. Let's look right here. What should you do right here? Because this is where we make our decisions. Here. What's it going to do? Are we going to go up, or is this too high and we're going to rotate down? What are we going to do? Trend is up, but in this is resistance. See? What are we going to do? I can't answer the question. What I can tell you is what it might do and where it might do it. That's what the auction gives us. It gives us levels. It doesn't give us anything more. So the order flow says resistance is up here. The auction says support is out here. And the auction says this is the fair price in this store. Think of it like a store. So now if this becomes too high, I'm going to leave it and come down and take this out. If this stays too low and I can get past here, I'm going to come back up here. If I can get through here, then I put my helmet back on because I have nothing up here. I'm in what you call rare air. This is the only thing I have. It's a measured move, and it's based on the first hour's high and low called the initial balance. And this is 2 times that range. And it's a guess, It's not any different than your Fibonacci, And Fibonacci's as good as anything else because it's not worth anything more than maybe, and everything is maybe. So I don't use any of that. And the only reason this is sitting on here, because there's nothing else here. And I have no idea. So all I can do in this scenario is trail or be out right here. That's my choices. Trail, be out. What's the right one? How about this is a snap quiz. What's the right answer? Interesting question, isn't it? What is the right answer? I'll tell you where the answer is. It's in your trade plan. What most traders do, at least retail traders, not professional traders, is they make it up as they go. And the making it up is a response to emotions, emotional stimulus, fight and flight. We go from depression to euphoria. It's up here, champagne on ice. Down here, bailing out at the low of the swing. See what I mean? That's because there's no plan. It's just emotions. So, fear, FOMO, all that is always operating when it's only emotional triggers. So the trade plan exists so you can replace the emotions with facts, statistics, something tangible. If it's not tangible, you only got one thing, and that's emotions. Well, emotions don't work in this business. They're actually the problem. And most retail traders, think it's a business of setups. It isn't really. You only need one. Imagine this. Imagine you only needed one trade that you vet, that you become expert at. And every time it shows up, you take it. And you're confident to take it because you know over time you've got a winning process. And it gives you the confidence to overcome your fear. One trade. It's proof of concept. And that's what I always suggest in Trader Lab. And most traders are looking, give me more setups, give me more certainty. And the marketers are very happy to sell that to you. It doesn't exist, though. You can't get certainty. What do you get? Edge. Where do you get it? Come to Trader Lab, you can derive an edge. And then one trade. Now, one trade doesn't mean one trade per day. It's one type of trade. And when you learn that trade and develop the discipline, which is the other element, that's the bigger obstacle. I believe anyone who comes to Trader Lab can learn to trade if they do the work. But most retail traders are more interested in pushing the button. They kind of get confused thinking this is a video game. It's not. Remember where the buyers were. You remember where the fair price is. You see this behavior? This is auction behavior. Now, hold on. Now, here's the thing that's so interesting about the auction. We care about the range. The auction just does its thing. If this was out here someplace, it'd be the same. We'd be going back to there. Except now we'd have whatever. And you guys who watch the streams, you see me do the same thing. I'm doing a generic process in multiple time frames. The variable for us here is range in these structures. And so this. But the last long in a developing daily time frame was here. So in a short time frame, we're doing this kind of thing. Too low, too high, retail. But in the developing time frame, this was the last long. So you could be long from here, then you're hanging out in this thing, and you're either out because of this, or you're managing and you're willing and accept being taken out when we fall, if we fall under here, which is possible. I don't want to say probable because it's random. Does that make sense? Because what's not happening? We're not getting above this. So this is my fair price. So if it becomes unfair, like we're not paying this, then I'm going to get in the car and I'm going to leave the store and I'm going to go somewhere else. I'm going to come check this. What do we think of this? High volume. Oh, it's too low. Let's come back and check too high. If this is too high and this is too high, I'm going there. That's what I know. When I say it's going there, I'm not saying it will. I'm saying it might, because that's how the market works. So I know that. But that's all I can know. I can't know what the buyers and sellers think about this. All I know is we left it and we have tested it. And then we have gone away. I next know that this is the retail price and I'm not getting above it. I'm breaking below it. So it's resistant. See it? So if that's too high and I know the sellers are there, then what might happen? Then the sellers under here go on the chopping block. That's what I know. So then, since I don't know what will happen until hindsight, my trade management is built into this already, and then I get taken out of the loan. And that's like, okay, that's it. Can you see not what will happen, how you have a plan for what might happen? Now, this is an important event right here. And here's our high volume. This is important. So we can do this, come back there. We can fall under here and still come back. So for me, it's still longs. And we did not take this out, right? So let's see. This becomes support. This is still resistance. See how this works? See where the last price was? This is the auction. I find it a beautiful thing. It's like poetry. And the only thing about anything in trading is we don't know if it's going to stop where it was too low, or just, like this isn't even here. So when I'm organizing my plan, I use these structures because it's a language. So I don't use indicators. I speak market. Basically, I'm reading the order flow and the auction. That's why I say this is a profile. This is the profile, and it's a chassis to overlay trades on, because the profile is not an indicator. It is showing us that every price is not created equally. What happened up here, 43 contracts went off at the high. 43. Well, what does that tell you? This is like, I always like to say that the can of tuna for the casserole, you forgot it when you went shopping, and now you go to the convenience store. But there's not a line for tuna at a high price. So less buyers. If I run out of buyers, then the market will rotate. And then if the perception is this is too low, I will find my buyers to come back to the retail price. And if the retail price is too high, I can then rotate out to the previous retail price to check if it's still too low. If it's too low, I can then rotate back here. And if I can't, and I fall out here, then everybody does the Acapulco cliff dive, and then we're looking back here. That's what I know. And I can't know anything else, so that's all I know. But if I can organize my understanding of the market and the mechanics, when these locations align with what I perceive to be the context, which is up, I can then use them for trade management or trade initiation. So right now, support is here, not a recommendation. Resistance is there. And if I fall under here, then that's that. I'm still seeing my selling. See the selling? That's delta. So I have sellers. Isn't that exciting? So what I need to see now is I'm seeing the sellers. Am I going to see absorption? The buyers, you see them? So this seller was absorbed. Now, the thing with an iceberg is we don't know, just because an iceberg buys here, if that buying or absorption is done, it doesn't, and there's some more, it doesn't mean that when they're done, that we won't go lower. These are buyers, and that we're not in the same business as them. So I see the buying, I see the absorption, and this is my retail price. So this is retail in a developing time frame. That's all the volume for the day. This is retail in this little thing here. So this is all this. This is isolated, high volume. If I take the whole day so far, let me make sure I got the right thing here. Some of my levels look a little off. No, this is correct. So this is the new retail price for the day. This is saying too low. Retail, that was too high. So support, resistance. So I can be just sitting here, chewing on my nails, going from euphoria to depression. I'm going to get stopped out to, oh, now it's looking good again, to resistance. So when you're in this thing as a day trader, you're constantly buffeted by your emotions. The trade plan I have found is the only solution because you're taking your emotions as much as you can out of the equation and you're letting your plan do the work. So the plan exists before you walk in to the market. And it's not what will the market do? That's random. It's what you're going to do based on a conditional statement. So if this, then that. If not, then what? And what was the if not before? We went down to the low of the day. We didn't take it out. So if this, then that, take out the low, the first hour's low, get the stops, the opening swing low, and then look for a long because the trend is up. If not, which didn't take it out, and I think got right there, then what? Very bullish. Then it runs away. What do? Wait for the next trade and then get aligned and do your thing. The answer is in the plan and the statistics, not in predicting anything. If you can accept this isn't a business of being right or knowing what's going to happen, any of that, then you're way ahead. Because most traders are trying to fulfill their needs to be right, which is an ego gratification thing and validation, and many traders actually use this, or I should say developing traders, for approval, validation, because they have a deficiency in their own self-worth. So maybe they can get it here. And they measure themselves trying to get that approval here. There's so many elements of the self that come into play. And most traders have no idea how that comes into play in this business. And we work on that quite a bit in the Trader Lab because it's the last place traders look. Traders spend their lives combing the internet for setups and certainty. And in my opinion, that's a way out the door because that's what most do and most fail. So if that's what you're doing, you always have to ask yourself, are you doing what other traders do who fail? So for me, it took a while, but I started thinking about, am I doing what other traders do? And eventually I figured out that why am I getting the results even though I have random winning trades? I just have to make it better. And it turned out to be a whole different thing. And that is that I was getting the results and the inconsistent results because I had winning trades. And the problem was winning trades makes you want to keep doing what you're doing, but you don't have an edge. See the behavior? Don't you find this interesting? Now, we only have this. I mean, this is Friday. Everybody's, they're probably in New York. They're probably on their way out to the Hamptons already for the weekend, get the barbecue going. It is October, fall. Beautiful. If you ever go to upstate New York or anywhere up there in the fall or Wisconsin, it's absolutely incredible. Let's watch. Does this make sense, guys? You kind of see now. This is Trader Lab. Now, the market is what it is. It gives us and it takes. It giveth and taketh away. And if it doesn't fit your plan as far as the range, you can't trade it. Or if you do, it's FOMO. Your plan outlines everything. If you're in Trader Lab, you already know where your trades will show up, if they do. And there's obviously different places, different locations where your trades might show up. So you wait for the trade. So I know if I have the IB continuation trade, even if I'm not on a long or the thing runs away from me, that I have a trade. And then I'm either going to take a stop or it's going to go on to its target. And then I just manage the trade. That's what I know. I can't know anything more, so I don't try. So what do we know? Too high, too low, too high. If I can't get above this, maybe I'm going to fall out of this. And if I do, that would be the end of it. And then it's further outside to come back here. I already know my next trades will be, unless things fall apart. And that'll be out here. And maybe even out here. So I have right here. So I have this and this for potential longs if this all falls apart here. And these are not trade recommendations. It's just levels. The auction, think about this like real estate. Location, location, location. That's what this is. Okay, so this is over. All right. So what do we know? Too high, too low, retail. I'm not paying that. And then it's got to hold this. And there we failed to get back. Now break low. Now we just fell out of this. So that puts this on the plan. So that's it. That's all there is to this. And it's random. So nobody knows. I know here is a problem. So I know if I come out here, I've got to get there and clear it, which we didn't do. So that's why you got this. So that's it. So that's all there is. Now, if it does this and comes right back, it doesn't matter, because then I'm over with that trade and I just sit there. And if I don't take another trade for the day, I'm okay with it. I have to be. How we doing over there in YouTube world? Hope you're getting something out of this. Today's just not a great day. You know, it is what it is. I find days like this a lot of work. And it's very easy to get frustrated because, like, you get this kind of a thing, you get taken out of your long, and then it comes right back here. What are you going to do? I'm pretty patient. I find that if I get taken out, I'm not gonna FOMO back in. Like, oh, I got to get back in. That's emotions, fear of missing out, right? FOMO. I don't. I just go, well, all right. What do I know? I know this is too high at the moment. I know I could come back and come right back here, but it's not I'm out in the middle of nowhere now. And I fell out of this. So at the moment, too high. This was my outside edge. Now, this was the last place. It was too low. I got below it to here. So now I'm out here, and this is now resistance. See? So I came out to the next one. See where it is? And now that, my high volume, this is resistance. That's it. So I don't have anything here because I could just come back here and then come back there. So there's nothing for me to do now. Me, I'm not saying you, I'm just talking about me. I trade rotations, And my thing is not to be trading this stuff, but to be trading like from here, up to there, and maybe, either exit there or exit here. And that includes more than one contract. So just saying, it's just a way to approach it. So I go for the larger swings, and it's either that's fine or it's not. And I just let it do what it's going to do. I just kind of accept it now. Hope you're getting something from this. Kind of a lazy, hazy day, We do have to be conscious that it's Friday and we can anticipate profit taking potentially before the end of the session, flattening out, evening up, So those are things that you have to be conscious of, but doesn't have to do it. We're above yesterday's high. We're at new all-time highs. Market is chugging along. You do have to be conscious of potential, this kind of extension that we have. This is not a recommendation, or I'm not calling a high, but this behavior, when you get acceleration, it can create extremes. The other thing not to forget, not that it may be the all-time high coming up. Nobody will know that until hindsight. But the market is not one direction. It always can appear like it, but look how the market works. This was an all-time high. And then the stops that were under these days got taken out. And sellers were in here, and then the buyers came in here. Buyers were there too. See the tail? See the tail? Then we went up. So we have buyers. Sellers were here. Took the longs. So we had sellers, got longs in here. Sell stops taken out there. Buy stops are here. Took them out. Came down here. got shorts in early, and then our trend day. Actually, the shorts are in here, I mean. Then our trend day took the stops there, took the stops there. Then we got our selling yesterday. Gets shorts in, takes out the weak longs, still going up, then north. So the tail, that's what sets up the longs for today. So longs. So that's why in the higher time frame it is north. Then intraday, it's just, where do you get long? Unless you're a counter trend trader, and then you could trade shorts or whatever you want to do. Does that make sense? So what do we know short term? Too high? Too high. What then? Maybe down here. So, and again, I'm just talking about me. I don't take the short. I just take the longs, and then I get taken out of my longs, and I let the shorts marinate. It's not my trade. I trade with the trend. Please leave a like if you're visiting in YouTube. If you're interested in this, use the link down there. If you want to visit Trader Lab, it's a community of traders. It's about leveraging the experience of these traders, myself and others. Our senior trader has over 50 years. I've got 46, and we've got everything in between. So, and there's no holy grail. Sorry, guys. No secret sauce. None of this. The only thing you need, and you have a printing press in the basement. Not so much. It's just not the real world, you know. It's fantasy, and it's great for the marketers. You know, just remember, snake oil's been around as long as there's been snakes. This is the Trader Lab community. Thanks everybody who participates and posts in there. That's somebody did that of me. That's me throwing my coffee. He's saying, "How's that bond trade working out?" He was a trader on the desk with me. And there's my CQG at the time on fire. Taking a little heat, perhaps? Yeah. That was from the mid-1980s. I thought some of them were kind of nice. I wanted to share them. So charts, all kinds of stuff. A lot of things going on. A lot of mutual support, analysis, data mining. Thanks for posting that, Rich. There's a lot going on. We're all helping each other get better. That's why I created Trader Lab. It's not about me. It's really about you and the collective leverage. It doesn't matter how long you've been trading. If you're new or been around, we've all walked in the same shoes. This is what the library of webinars looks like. Ned, thanks for curating this. Watch the primer webinar. It talks about anchored inputs. Most of us are using random inputs when we start out, you know, throw the kitchen sink and whatever else you got against the wall. And with randomness, somehow you'll get certainty. Doesn't work. Casinos don't use random inputs. They use anchored inputs. Watch this one. It's got about 34,000 views. Meet the Trader Lab. It's an advanced trader methodology, but advanced doesn't mean complicated. It's actually simple. What isn't simple is randomness. So you need a plan to work in randomness. Is there a holy grail? Well, no. But how close can you get? Stop gambling, start winning, and a lot more. Multiple time frame, a lot of other stuff in here, too much to talk about. And there's some in here up to 4 hours long of real-time narration. You could just see this in real time if you're inclined. And all of this and a lot more is available. Don't forget to give the like. Appreciate you stopping by Trader Lab. Be sure to review the last couple days' streams if you want to see the trend day configuration. And then other configurations of how we participated. You can learn this, and there isn't one way to trade. What there is the way that's going to be right for you. And in the end, it's all about you, nobody else. Thanks so much for visiting Trader Lab. I'm looking forward to this weekend. I need a rest. And I'll see you guys next week. Trade safe. And if you don't have a plan, take a deep breath. And if you're not getting the results you're looking for, it might not have anything to do with your effort and may completely have to do with your process. And don't forget that like on the way up.